The society is built in a way that all you would do is to be a slave. You earn money. Before you receive that money, you pay the government income tax. You pay social services, NI. Then after that, you receive your salary. Once you receive your salary, you pay the bank, mortgage. You pay the credit card provider. You pay the nursery. So even though you work hard, you don't feel the money. You don't see the money. Because these three people are taking a big chunk of that money. You are paying. Paying. At the end of the day, there's nothing left in your pocket. Most people are more focused on making more money. But what they fail to understand is that the most important thing that you need is education. On today's video, I'm going to try to explain to you in a very simple manner what is an asset, what is a liability, and what is the difference between both. Rich people acquire assets. Poor and middle class people acquire liability that they think are assets. Like people always say, work hard, my friends. It's not about working hard. It's about working smart. So here, balance sheet full of liabilities, expenses high up, income. What do you have on the asset column? Nothing. If you do not understand this principle and you do not master it in your day-to-day life, every time you are making financial decision, you will always struggle financially. Hello everyone and welcome to my channel. Okay, my name is Christian. I'm an accountant and I've been working as an accountant in the UK for over 16 years. So I can certainly say that I have experience in everything that has to do with businesses, setting up businesses, tax return, taxation in the UK, corporation tax, income tax, inheritance tax, capital gain tax, everything that has to do with tax, corporation, finance in the UK. The reason why I open up this channel is because I want to be able to share my knowledge and also really be able to direct people to a certain type of video every time they ask me a question. I have a lot of clients coming to me with questions, family, friends. So I thought maybe it should be a very good idea to set up a YouTube channel where I condense all the information that I know on a particular subject, so that if someone comes to me, ask me a question, instead of repeating myself every single time, I could just say, you know what, click on that link, watch this video, and I think this video will be able to help you. So the purpose for this channel is to be able to explain finance information, accounting information in a very simple manner, in order for you to break through poverty, in order for you to be financially free, in order for you to be better in your finance. My greatest concern is that most people are more focused on making more money. But what they fail to understand is that the most important thing that you need is education. It's not about how much money you make. It's about how you spend your money. It's about understanding the basic and the principle that makes someone rich and someone else poor. Everybody, I believe, we all know how to make money. But have you ever asked yourself the question, why is it that I make more money but I feel like I'm always struggling? I used to be that person. Even though I went to university, I studied finance, I work in finance, I used to struggle with my finance as well. Because there was very little principle that I did not understand. I used to be in that situation. I know how you feel. It's very frustrating. Working hard, earning money, and feeling like, where is the money gone? I can't see the money. What's happening? I seem to be making more and more money, but the more money I make, the less I can see. Where is the money going to? So on this channel, we're going to talk about all these things. I remember when my husband and I got married, I just finished my degree in accounting and finance. He just finished his MBA. We were both just coming out of university, freshly married, no responsibility. We used to live in a flat you know, the studio flat where the living room is inside the bedroom. Okay, you see what I'm talking about, right? So we didn't have any debts, so we started working and we started earning money. Okay, and we started enjoying life basically. I remember we used to my first salary as an accountant was 1,600, and I think my husband was earning about 1,800, and that is like 3,200, 3,400 per month. We had our first daughter at the time. Life was good. We could live. We could pay up our monthly expenses with no issue. We even have extra left at the end of the month to invest. But what we did is spending. We just spent. The more we earn, the more we spend, basically, because we didn't understand the difference between an asset and a liability. Okay, so I used to be that person. Okay, so I understand what I'm talking about. So today we're going to talk about 4 habits keeping you poor. The first habit, which is the most important, and I think this is where most people fail, is that you do not understand the difference between an asset and a liability. Come over here, come over here. Open your ears and listen to me. The first habit that is keeping you poor is the fact that you do not understand the difference between an asset and a liability. On today's video, I'm going to try to explain to you in a very simple manner what is an asset, what is a liability, and what is the difference between both of them. This is probably the most important principle that you need to understand to be able to get rich. I used to be that person. Even though I went to university, I studied finance, I was doing tax return, I was doing accounting. I know what an asset is, I know what a liability is, I know what a profit and loss account is, I know what a balance sheet is, I know how to prepare a tax return. I know all these things as an accountant. Can you believe me? As an accountant, I did not understand the principle of asset and liability when it comes into my personal life. I know most of you now are asking yourself the question, so what is an asset? You keep talking about asset, liability. What is an asset? What is a liability? An asset puts money in your pocket. Liability gets money out of your pocket. So every time you spend your money on something, you ask yourself the question, is that thing bringing money into my pocket? If the answer is yes, then it's an asset. Are we clear on that? Every time you spend money on something and you want to know if that thing is an asset or a liability, ask yourself the simple question, is that thing that I'm about to buy or purchase or invest into, is that thing going to bring money into my pocket? If the answer is yes, then it's an asset. And you are doing great. Thumbs up. Is that thing going to take money out of my pocket? Yes. So this is the liability. And thumbs down. Rich people acquire assets. Poor and middle class people acquire liability that they think are assets. Do you understand what I'm saying? Rich people acquire assets. Poor people and middle class acquire liability that they think are assets. This is where the trick is. And this is where all of us are in financial struggle. If you want to be rich and maintain your wealth, all you need to do is to buy and invest in more assets. On the other hand, if you want to be poor or middle class, all you need to do is buy more liability. The system is made in a way whereby we are conditioned to act a certain way. They don't teach these things in school. They teach accounting, they teach asset and liability. I went to an accounting school. I study accounting. I have a degree in accounting, and I went to do further certification. So I know this concept. But the only thing is that they teach you as a concept. You do it when you do your work, but you don't understand how this really impacts your personal and financial life. The system is built in a way that we are conditioned to think and to act a certain way. We're going to take a case study. We have a couple. The wife is called X and the husband is called Y. Both of them fall in love, get married. Both of them coming out of university with very good qualification, just like me and my husband, okay? Back in the day. At the time when they got married, out of university, freshly out of university, they were living in a very cramped, very small studio flat, just like me and my husband. Remember the story? Me and my husband used to live in a studio flat in Charlton. You know those flats where the living room is inside the bedroom, okay? Very small. Now, both of them, they have both very good qualifications, so they start working. Nice, okay, wow. That's the pattern. That's what it's expecting from you, okay? You both start working. And then you start saving money. And then you decide, oh, we want to have children. And we want to raise children in a beautiful house, with beautiful garden, with a lot of space, so that I can have the dream family life that I see everyone on social media. Lord Jesus.
We were in a one-bedroom apartment. We were itching to buy a house.
Why?
Because we wanted to start a family.
What does the two have to do with each other? I'm confused.
Well, I guess we wanted more space in order to raise our child.
You know, sometimes I think the issue, that's why you need to rebrand yourself. You need to, what's the word? You know, when you restructure your brain, like you need to rebrand yourself. You need to think differently if you want to be successful in life in this day and age, because the society is built in a way that all you would do is to be a slave. You work for the government, you work for the banker, you work for the employer, you work for everybody, but not for yourself. Like people always say, work hard. My friends, it's not about working hard. It's about working smart. You think the people that are successful in life is because they work hard? No. It's because they are smart. They understand what you don't want to understand. So let's go back to our case study. They got married, start working, save money to buy a very beautiful big house. Is this not what it's supposed to be? That is brilliant, right? And when they got this beautiful big house, I'm sure they have a housewarming, they invite friends around, family are very proud, dad is very proud. Ah, my daughter has now a big house in London with big garden. Ah, my son is now very successful. He has a big house with 6 rooms, with 4 bedrooms. Now your papa be this, right? Sorry, this is the African in me. It has to come out. I'm a proud African girl. Okay? So yeah, everybody's proud. You do housewarming. Your friends, your family are proud of you. Your friends envy you. You share pictures on social media. Wow, she's successful. Wow, they are successful. Wow, they are doing well. Nothing to know that what you just bought, that big house, you probably signed up for a mortgage. That's going to cost you about £400,000, because this is average of big house. Not even 400. Even that 400 is it. Yeah, about, let's say average— you sign up for this mortgage, for this 400 house. You sign up for a mortgage of 35 years with a fixed term of 2 years, okay? And after 2 years, you need to make sure that you find another good deal, because that repayment that you're paying now, which is maybe 700, 900, 1,200, after the 2 years, if you don't find good deals, if the economy is bad as it is now, you might end up paying 1,900 every month. For 30 years. In the name of what? Big house. Yeah. I know some people will tell me, but it's going to grow up in value. Meanwhile, that house is growing up in value. You are struggling. Life is a constant struggle.
Well, the house is beautiful, for one. Like, we walked in and we were like, we had rose-colored glasses. We were just like starstruck by this house. And I think we originally wanted, what, 4 bedrooms or something? I can't remember what our list was, but we wanted a lot. And for a starter house, it probably wasn't the best idea.
Remember, both coming out of university, got married, start saving, use all the saving they have to buy a house. Now, what they got, they have to furnish the house, they have to buy everything for the house. Now, this couple that starting very nicely are now in debt. This is how the cash flow looks like. Salary, expenses, income tax, government tax. At the bottom, balance sheet, what we have is what? Liability. Because yes, let me tell you, a house is a liability. It's not an asset. Mortgage, credit cards, because to furnish that house, you probably use credit cards, or you went onto this store where you buy now, you pay later, you buy now, no interest. Anyway, your balance sheet is full of liabilities.
How much did the furniture cost in total?
Oh man, probably 15,000. We did a bed, we did couches, we did chairs. I mean, yeah, 20,000, I would say.
Okay. So that's where you took out a line of credit to get the furniture. Is that right?
Well, through the retail, like a retail card.
Okay.
So here, balance sheet full of liabilities, expenses high up, income. What do you have on the asset column? Nothing. What is there on your asset column? Nothing. Because you spend your entire saving to buy a big house, your dream house. Because of all that, you don't have any extra income left. You can barely pay all your expenses at the end of the month.
This is the modern American money story. You're working hard, you're doing what you're supposed to do, and somehow you are still behind. Is it because you're lazy? No, I don't think so. I think in general, a lot of people work really hard. And yes, the system is rigged against everyday people, especially the poor and middle class.
Let's continue the story. Now you have children. You have to pay child care. And God knows how much is child care in this country. I used to pay child care. I used to spend back in the day, because I stopped paying child care 3 years ago when I started working for myself. Back 3 years ago, I used to pay 1,655 pence. I used to pay 1,655 every month for childcare. So now, at the end of the month, you barely have anything left. Sometimes you don't even have enough to cover your expenses, even though both of you are working so hard. Why? Because all the money that you're earning are going into bills, credit card repayment, mortgage repayment. Both of you are working as employee probably, so you are earning salary. Before they even give you your salary, they remove money out of it. Tax goes to the government. NI goes to the government. You are paying. At the end of the day, there's nothing left in your pocket. So you see here, even though you are earning money, you are struggling financially. Why? Because you don't know how to spend your money. Because most of the money that you make are used to sponsor your liabilities. You earn money. Before you receive that money, you pay the government income tax. You pay social services, NI. Then after that, you receive your salary. Once you receive your salary, you pay the bank, mortgage. You pay the credit card provider. You pay the nursery. You pay the electricity. You pay the gas. You pay the taxi. You pay the fuel. You pay all these expenses. At the end, you have nothing left. For some people, they can't even balance off. Meaning, the income is not high enough to cover their expenses. They're in deficit. This is worse. All this because you have nothing left from your income to invest. That's why Robert Kiyosaki says, rich people buy assets. Poor people and middle class buy liability, thinking they are assets. I'm not saying you should not buy your house. Buying a house is not an investment, I would say. People call it an investment. Personally, it's not an investment. Your house is not an asset. Ask yourself the question, when you buy that house, is that house going to bring money into your pocket? The answer is no. So that house is a liability. It's only when you pay off that house, it's only when you finish paying off that mortgage, and maybe you put that house for sales or for rents, and that house start giving you money, that you can move that house from liability to assets. Until then, that house remain in the liability section. So you work hard, you save a lot of money, and you use all of your saving to buy a large and a big house. That's where the issue is.
We had a large house and wanted to get furniture. Basically, that's what he was referring to. Is we wanted to get furniture to
How large?
Too large.
2,900 square feet.
You did not invest into an asset that's going to give you more money. Instead, you invested in the liability that's taking money out of your pocket, thinking they're an asset. Let's take our example again. Let's assume the couple saves money. There's two options here. They can either use the saving to go and buy the investment property. That investment property are going to give them money. And further down the line, they're going to use that residual income to spend on buying their own house. This is the ideal way to go about it. But I understand that buying a house sometimes is an opportunity, especially if you find something on the market that is below market price. For our own case, with the money that I make and the money that my husband make, we can afford a bigger house. We can afford a bigger mortgage. But you choose not to use up all this affordability on just a home. Let's take the example of X and Y. They have some savings. They have good jobs, meaning banks are willing to give them money. They could have used maybe half of the saving to purchase a small house. Doesn't have to be bad. A small decent house. Instead of going for a 400 mortgage, they could have gone for a 200 mortgage. Instead of going for 30 years repayment, they could have gone for 10 years repayment on a 5 years fixed term. or maybe 10 years fixed term. Don't tell me you can't do it. You can't do it. And they use the remaining saving to invest in the property. In that case, they have both words. They have the house that they own, and they have investment property working for them. In this case, they will have an asset into the ass. They will have an asset in the balance sheet. Even though they will still have liability in the balance sheet, that liability will be lowest because repayment on a £400 mortgage is different from a repayment on a £200 mortgage. And on the top of it, they have money coming for the investment property. You see the difference? So I recently traveled with my husband and one of my friends said to me the other day, like a couple of days ago, "Ha, madam, you're enjoying life. Oh. I wish I was making the type of amount of money you are making, because this life you are living, always traveling. A few months ago you were in Florida. You just came back, then you went to Morocco. Then you went in France. You went to France a couple of months ago. Before you know, you were in Cameroon. Like, you are traveling every time. I was telling my husband, and this Christian, she's enjoying life. She's enjoying life. The kind of money her and her husband is making. I wish I had that money. I listened to my friend. She's my friend. She's also one of my clients. So I do her account. I know how much she makes. And I said to her, do you know that I don't even make half of how much you are making per year? She said, "Ah, madam, come out of it. You are talking nonsense." I said, "I'm not lying. I'm not making half of how much you are making a year." All this to say that it's not about how much money you make. It's how wise you are with your money. It's how wise you are with spending your money. I am someone that I am really good at sitting down and judge myself. When I started working, I was earning 1,600. It was in about 1,800. Life was good. But as I grow into my career, I started earning more. But I realized that even though I was earning more, I was still struggling financially. My husband was earning more, but we were still struggling financially. I remember one day I told my husband, back in the day, both of us used to earn about 3,400. We were living a good life. How come now we are earning twice or 3 times more, but we are still like, money is still tight? It doesn't add up now. Do you know why? The issue was that the more money we earn, the more money we spend. So one thing I need you to understand and to get out of this video is that it's not about how much money you make. It's about how much money you spend. As an employee who's also a homeowner, this is how your efforts can be described. Salary. You work for your employer. Tax. National insurance number. You work for the government. Mortgage repayment. You work for the bank. So even though you work hard, you don't feel the money. You don't see the money. Because these 3 people are taking a big chunk of that money. So what you need to do now is to learn how to work smarter. Is to be more smart with the way you use your money. Your salary income should be used to sponsor your investment. You should use your salary to buy assets so that that asset can give you income, and you use that income to sponsor your life. This is the way it should be done.
Each dollar in my asset column was a great employee working hard to make more employee and buy the boss a new Porsche. From Rich Dad, Poor Dad.
Because every time you take your salary and you use that salary income to spend into your liability, you don't have any extra income less for you to be able to invest into an asset. So at the end of the day, you struggle financially, you stress, you're overwhelmed, you become anxious, and you rely 100% on your employer. Just imagine that you have mortgage repayment, car repayment, credit card repayment, and you lose your job. The case is even getting worse.
Every dollar of debt that you have from these poor spending habits is a piece of your future that somebody else owns. It's a piece of your time that you owe to the bank, you owe to the lender. And
the rich buy assets. The poor only have expenses. The middle class buy liability that they think are assets. If you want to get rich, if you want financial freedom, you need to understand the difference between an asset, which is something that puts money into your pockets, and a liability, which is something that takes money out of your pockets. Now that you understand the difference between asset and liability, you need to buy more assets and less liability. That is the only way, that is the unique way to be able to get rich. If you do not understand this principle and you do not master it in your day-to-day life, every time you are making financial decisions, you will always struggle financially. We're coming to the end of the video. I believe I've explained as simple as possible the principle of asset and liability and how differentiate between both of them, and understanding how both of them can affect you financially is going to help you take control of your finance and be more financially literate. In fact, if there's one book I would advise and recommend you to go and read first, is this book. Please go and read it.